Which commodity should you start trading? Is it copper concentrate out of Chile? Is it gold out of the Democratic Republic of Congo? Or is it jet fuel out of solid leads found on LinkedIn? The opportunities are endless, but most of you guys doesn't seem to have any success. And after thinking about it like 30 seconds, I think I found the reason. Most of you guys are brainless sheep. You don't think. You see some random shit on the internet and you think this is how commodity deals are supposed to be closed. Like sheep. You are like in Plato's cave. You are chained and you only see shadows on the wall. And as your reasoning ability is so low, you are not able to open the chain even if the keys are right in front of you. I have videos where I speak about margin, about closing, about terms. Everything is online. But some of you guys have the brainless audacity to send me like this. If I close this deal, I would make 1.2 million US dollar, lol. Help me and you can have a piece of it. Lol. So now that I'm finished with my rant, in this video, I'm going to give you 2 commodities that I would start trading now if I had to start from scratch again. But first, I'm going to give you 3 parameters that I'm actively avoiding. Market structure that if I see them, I run away from that commodity and won't look back. And the idea is for you to understand my way of thinking, what red flag I'm looking for, so then you could come up with your own opportunities. So you can unchain yourself from the cave. Cool? So let's dive in. So right now there is a part of any supply chain that I wouldn't try to compete with a small and medium commodity trading firm. And this part is buying FOB and selling CIF make no sense. And by the way, if you don't know what FOB and CIF means, check the first link in the description below this video. You definitely need some education. This part of the supply chain, the international waters, is trusted by large and old trading firm that has been doing it for years. They know all the buyers, all the suppliers, they have a lower cost of financing and they have a better ability to analyze the risk. It makes no sense to try to compete here without a large capital. Also, if you think 10 years down the line, by being a pure trader FOB CIF, you don't build a company, you don't build an asset that is easily sellable down the line. And actually, I had this exact situation that happened to me a couple of weeks ago. I had the opportunity to sell cocoa beans to one of the largest buyers in the world. And on the other hand, I know very well an exporter in West Africa. So as always, I get extremely excited and I jumped on the deal. But then I crushed the numbers and I saw what I just told you. It makes no sense for me to jump on that trade flow. Now let's speak about the second red flag that makes me run away from a commodity. As a trader with limited capital, you don't want to sit between 2 high capex counterparties. Just to be clear, let's define what high capex means. Capex means capital expenditure. And if we look at Investopedia, funds used by a company to acquire, upgrade and maintain physical assets such as a property, plants, buildings, technology or equipment. So high capex means that there has been a lot of investment made, usually in a unit of production. Think of oil platform, underground mines. For instance, a commodity that would make no sense to trade and that has those characteristics would be bauxite. Bauxite is used in the production of aluminum, and aluminum refinery needs a lot of energy. It's hundreds of millions that you need to put down to build that aluminum factory. And on the other side of the trade, a bauxite mine is also a giant infrastructure in itself. So a trader without a lot of equity wouldn't make any sense in the middle of such a trade flow. So now let's speak about the last parameters that I'm actively avoiding. Here, this is quite simple to understand. If there is a liquid future market of the commodity that you want to trade, there is a good chance that you need a hedging account just to perform in those markets. Therefore, it means that this is a lot of money that needs to be allocated to the hedging account. So this is less money that you can use to close deals, purchase products, prepay for products, and so on. You also have a chance to get margin called if the market goes crazy for whatever reason. And actually it happens quite often. And on the future market, you also face a completely new type of risk. So you are going to face hedge funds, speculators that have nothing to do with the physical side of the commodity. They play the momentum game and drive a lot of day-to-day movement of the market. So now, without further ado, because I know it's been a long intro, let's discuss the two raw materials that I would start trading today if I had an extra 8 hours a day. Those two products have those characteristics in common. They are niche market, so you don't have to compete against the big dogs out there. There is a growing consumption, because I really don't want to put 10 years of my life in a dying market. Everything is more difficult when our market is retracting. And finally, the buyers are identified. I need to know who are the buyers, or at least I need to know to which conferences or event I need to go to meet them. So the first set of product is feedstuff for bioplastic. Are a type of plastic derived from renewable biological sources, such as plant, starch, or microorganisms, rather than traditional plastic, which are derived from petroleum. They are designed to reduce the environmental impact caused by plastic, as they can be more sustainable in a term of raw material sourcing and, in most cases, biodegradability. There are a lot of different feedstock possible to produce bioplastic, but I would learn all of them. I would intimately understand all the technology, and I would try to be the specialist in terms of sourcing those feedstock. The second raw material is, okay, I'm not going to lie, this one is a little bit more hardcore. And I agree, if you are on a date, I mean, don't mention that you trade slaughterhouse waste, especially if you try to get lucky that night. Anyway, it could be a great opportunity, especially if you are in less developed countries, because I've seen a lot of slaughterhouse just throw the waste like in a ditch next to the place and don't recycle the waste at all. Here there are quite interesting trade flows to set up. If you can agglomerate waste from several processing units and ship them to someone that will make powder out of it, there is some money to be made. Of course, it's a complex supply chain to set up, especially on the legal side, as you need to make sure that you are compliant with all the rules and regulations. But there are golden opportunities. So that's it for me today. I hope that you liked the video and that you learned something. And if you are interested in breaking into the commodity trading game, click the first link in the description below this video and download our brochure. Ciao!